All right. Hey there. Good afternoon. Almost good afternoon. Good morning, depending on where you are. Chris Franks with Texas West Capital coming at y'all live here on Friday the 13th, 2024. Hopefully you guys are doing all right. Before we get going here, make sure you guys hit the thumbs up, hit the like button, subscribe to the channel, follow me if you're on X watching this, or Twitter or Twitch or YouTube or Facebook or wherever we're coming from. And that way, of course, you'll be then notified whenever, we've got the new videos coming up and the new live streams and all that fun stuff. Fibbo is not able to join me today, but I believe he should be here next week. So as always, Fibbo comes every other week, as long as his schedule allows. So, yeah, there we go there. Hopefully you guys are doing all right, man. We got today's, topic is, is this just a dead cat bounce? And, as a lot of the much more bearish out there would want you to believe. And we'll take a look at that today. So right before we got on here, of course, Bitcoin decided to break out higher locally, which has been a good thing. So we'll talk about that. The stock indexes are just about to hit their all-time highs if they haven't already on there. Yeah, pretty damn close right now. Man, it's a great Friday, right? So, Friday the 13th, and, some people are superstitious. I don't know. Are you guys superstitious at all? I can't even say it. I'm not superstitious, but I know a lot of people are. And as such, we're kind of expecting today to be not so great, right? Because, again, when you got the emotions going and, the superstition and everything, it's kind of hard to believe that markets could do something good today. But here they are. Nonetheless, heading up here. For Bitcoin in particular, I think it's probably a good thing. We get a rally up through today and then maybe a pullback through the weekend. And that way it fills in that CME gap that's going to be created over the weekend if we're getting the rally. Potentially, if we kind of, I'm talking about if we kind of just continue rallying up in through the evening, maybe into tomorrow morning or something. We could pull back in the beginning of next week and then potentially go higher. But again, we will have that chart here in a minute. What's going on, Brian? I see you there. Brad says, not superstitious here, my man. That's right. Let's not be superstitious. What's going on, Matt? Sats? Good to see you guys. Hey, listen. Look, Fiboswani came out here to apologize. Look at this. He says, next Friday, take care. But yet he had time to come say hi, right? Mm-hmm. I think he just didn't want to be a part of the show today. What do you guys think? But anyway, no, just kidding. But before we get going here, guys, we have something really exciting that I've kind of been, hinting about the last few days. So TWC, Texas West Capital, turned 7 years old on the 11th. So just a couple of days ago. And we've always been all about education. Pretty much everything we've done for the last 7 years has revolved around education. We kind of say, well, what can we do, to help other people out as well, right? So sometimes they want more than just education, right? They want to see how are the trades actually done. They want to know what trades are we taking exactly and whatnot. And we said, hey, what's up? Let's do that. So we are going to launch next Tuesday something called the TWC Traders Club. And what we're going to do there is it'll be myself, it'll be Fiboswani, and it'll be, look at him, he's right here, Mr. Andrew Bennett, one of my students who's really done extremely well with what he's learned with us, and continues to be profitable as a trader. And so what we're going to do, guys, is we're going to post all the trades that we take with futures and crypto. So you'll being a member of the club means you'll get access to all those trades. We'll tell you what we're thinking about trading, what we're watching before it happens. We'll tell you when we get in. You're going to know where we plan to exit, where we plan to take profit. If along the way in the middle of the trade, if maybe structure changes, market structure changes enough, they would go, well, I'm really not feeling like we may make the target, so I'm going to go ahead and take a partial profit and move my stop loss up to here, or I'm just going to exit and go ahead and look for the next trade, and we're going to let you know when that happens. So basically, it's almost like a copy trading service, just not automated, right? But there's other things that I plan on doing there as well. I'm going to do like market updates every day for you guys, Monday through Friday. And then, of course, we're going to have occasional live events that we'll do with y'all along the way. Anyway, a lot of really cool stuff for this here, right? Fibble Swanee says, yep, I'm avoiding you in the office with a client today. Fibble actually had to go to the office today. But anyway, you know, so the excitement here, the exciting thing here is that you get to actually take the trades that we're taking. You know, we found ways that we've become consistently profitable, you know, as we trade. And now you're going to get, I've never actually done this before. I've never given like every single trade that I do, you know, because it's a bit of work to kind of do it. But I think this will be a great addition to what we do at TWC. And it's going to be really inexpensive. So here's the thing. It'll be $50 a month, guys. But guess what? If you're getting signed up basically this weekend, you're getting your first 3 months for $50. So that's going to be our launch thing that we're doing. You know, it's $50. Try it out for 3 months. See what you know, see how you like it. Get all the trades, you know, get everything that we're trading there. And then, you know, if you like it, stick around. $50 a month. You really can't beat the price for what you're getting here. But, you know, 3 proven traders, successful track records, and you're getting access to those trades. So also what we'll be doing is I'll be also giving you access to my risk framework that I use, risk management. And so that way you'll understand how to approach the trades as far as position sizing, proper risk management, all that stuff. Now you can do whatever you want. You can trade it however you want, but I would advise you to follow the risk management framework that I'm going to provide. And then, you know, so that way when you get in there, you're trading just as, you know, just as we were trading. This is what we do. This is how we do it, right? Anyway, really exciting. Man, I hope you guys are excited about this. You know, again, it gets us just beyond the educational into the actual trades that we're doing. So there'll be some swing trades in there. There'll be shorter term trades, all that kind of stuff. If you're part of the group coaching, you're going to get access to this. So you don't have to worry about, you know, it's a separate purchase or anything. Let me think here. Yeah, I think that about does it there. So anyway, I'm going to drop the link later. I'm still getting everything finished up with it, but it's going to be, I believe it's going to be TWCTradersClub.com to get access to it. And man, so there you go. Okay. Sats, what's up, man? He says, that sounds awesome, Chris. I'm excited about it. By the way, Sats, you know, I've been looking at trying to figure out how to do the live trading, right? I think we're going to trial it along with this as well. So these will be, you know, trades that we're going to take, you know, we'll post the screenshots of what we're looking at, the charts and everything, but I'm going to try to trial in doing some live trading with you guys. So live trading is shorter term. We're going to use price action concepts in that much more than anything else. And for Sats, you know, Sats likes to trade the smaller time frames, do the day trading. So that's right up his alley. But really trying to turn this into something huge for you guys. I might be bringing in 1 or 2 other students that have done really well with us as well. And then you'll get access to their trades too. So still working on getting them in. But right now, starting off, it'll be myself, it'll be Fibble Swanee, Brian, and it'll be Andrew putting our trades out there for you guys. Every day that we have trades, they'll be out there. Boom, 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 every week, continuing on through that, okay? Do we trade options on live trading? So again, we're not doing live trading. Live trading is something I've been trying to get in there. And so I'm going to trial some, I'm going to start with that. We don't usually do options live trading. But there is, you know, options is something I'm looking to potentially add into this. If I can find the right person to bring in with that. So, you know, for me, just doing it, it just, as some of our students know, I often take on way too much for me to be able to do it all. And while I do trade options, for me to be doing, I just think it would be too much. So I'm going to look for maybe somebody to bring in to add that side to it as well. But it'll be lots of fun, guys. You know, again, you get, you know, the trades that we're taking day in and day out is what you get access to. It's not like, hey, listen, we took this trade an hour ago, you know, whatever. It's like, hey, listen, this is a trade we're looking to take. These are the, this is where we're looking to potentially take it at. And if it doesn't work out, we're like, yeah, no, it got there and it didn't, the trade didn't work out for us. It wasn't what we were looking for. Or we say, hey, yeah, we're in the trade now at this price. This is where we're in the trade. Stop loss or whatever is here. We're looking for the take profit up there. And also the best part about this is, see, what I do often is if I'm in a good trade and I've got initial take profit, but price continues to do better, I've got a system to follow that trade up and to continue locking in profits as it goes. And so for something like that, where we get in a trade and it just keeps on popping, we'll be in there to be able to tell you guys, hey, listen, we're not out of this trade. We're going to stick in this trade. Just move your stop loss up to here as we continue going. We're looking toward this next area. So, basically it just brings you into our world, guys. Let you get in here and trade with us. Okay. Hey, you guys are here. Like everybody's here talking about Andrew, man. Look, Andrew drops fire in our TWC chat rooms. Let me see here. Matt, appreciate it, man. Says congrats on 7 years, man. 7 years. It's been really cool. Had no intention of ever doing this, guys. I was trading on my own. And then I've been doing calls for probably like about 8 months or so on crypto Twitter back in 2017. And they turned out really well. Anybody that was back then, we made tons of money. Some of the biggest trades we made were XRP, what was it? XVG? Was that what it was called? Yeah. I had a couple of really amazing trades with that. I mean, I got in at 7 and 10 sats and was telling people you should be in there at 7 and 10 sats. And finally got out at something like 1,800 back then because it was XVG versus Bitcoin back that time, because it was really before all the, the dollar denominated kind of thing became big. The on-ramps became big. But we had so many great trades that year. But I did one toward the end of August. You can search my timeline for it. It's still there on Twitter. Back, like I said, midway or toward the end of August, where I was looking at this. There was Scott always remembers it. But I can never remember the name of it. But there was this this crypto that had something to do. I can't even really remember anymore. It had something to do with gun ownership or gun tracking or whatever. And I said, well, it looks like we're going to probably get a 10 to 12x from here or something like that is what I said. And then just like 2 weeks later, it did 11x. And at that point, everybody just started bam, bam, bam. Man, do you got a group? Do you have this? Do you have this? Never planned on doing it. Started it there. No clue what I was really going to do at the time, but just, seeing the demand there and doing that. And it's become what it became today. So really kind of exciting to do that, So here we are now, continuing to expand, continuing to add more into it for you guys. Okay. Troy, what's going on, mate? He says, I remember that partnership that was supposed to be life-changing with XPG. I forgot about that until you just mentioned it here with Pornhub. Man, so many promises in crypto over the years, guys, and almost all of it basically has gone to nothing, right? It was crazy. Let me see here. But anyway, yeah, so really exciting times. Oh, Andrew, what'd you do here? Just dropped a radar alert on ARB over there in TWC. Good to know, guys. If you're in there, check it out. Data, what did you say, Data? Andrew's posting so many trades and charts. I don't even have the time to at least check them all. He's a machine for sure. He's really done well. So really excited to be able to bring him in here in with TWC here and introduce y'all to him that don't know him. But anyway, so we're doing that. Be watching for it later, guys, wherever you're kind of following me online. If it sounds like something you want to check out, again, if you jump in here, pretty quickly here, you'll be able to get your first 3 months for $50. And then, $50 a month after that. The idea, of course, is being to get you guys in there so you can see what it's like and join us in there. All right. So anyway, that's what we're doing. Hopefully it's exciting. Let's jump over here to the charts real quick, guys. Let's see what we got. Oh, I don't like that. Let's try this. That's a little bit better. What do you guys think? Look at this. So the laggard is is NASDAQ here, the tech stocks, right? But we've got what appears to be an ABC down here, and we've broken out above wave B, which would lock this in as corrective, which means we should be heading to a new all-time high. We're having great movement here over the last few days. Really doing well this week. This whole week actually has been great coming up here. You can see right here with the, with SPY, right? The S&P here. It rallied up again above its three-wave decline there, above the second wave. Topped out just prior to the all-time high, pulled back into the pivot area, found support around that area. Here we go. We are within a spitting distance, basically, of all-time high here. The Dow Jones, guys, the Dow Jones. So the Dow actually made a new all-time high. It was ahead of, remember, the Dow is the more broad-based index, guys. So your NASDAQ, if you guys don't know, your NASDAQ is very, very, very tech-heavy, right? So if tech is doing good, NASDAQ's doing good, right? Your Dow, though, is a much more broad-based index, right? So it's the components of the Dow are across different sectors. So when you have a broader-based rally, you're going to see the Dow do better, right? The S&P is kind of in between. It's still pretty tech-heavy, but nowhere near as tech-heavy as the NASDAQ, which is why you can see that it does, it's kind of in between on its rally here. You have what you have with the NASDAQ, and then you have, of course, the S&P here. And then you have, of course, the Dow leading this, because when we were back down around this area, I was telling you guys that we were having this broad-based rally, right? And that led to a new all-time high for the Dow there. Of course, it, like the others, pulled back to the pivot area, rallied off, and it's getting pretty close to breaking out again to new all-time highs. So definitely not dead cat bounces here on the indexes. And then we have Bitcoin over here. Right? Now, Bitcoin, obviously, we've been in this kind of sideways, slightly lower lows, lower highs thing here, from back there in, what was this? This is April, right? March. Kind of doing that thing, but here we are locally now taking off as well. So everybody this week, good bounces. Now the question is Bitcoin doing a dead cat bounce, right? So I posted on Twitter that I was looking for this general movement here, right? I was looking for this idea that we would rally up toward this 59,767, I guess, kind of area. And then looking for a potential rejection and pull back down to the pivot area, and then a rally back off. So if you're in that up there, I had posted originally over here, and then what we did was we did this flat correction. And then after that, I said, I'm still looking at the same thing here, guys, still looking for that same move. And here we are. We've at least got the rally up there. So we do have that rally. Let me kind of get rid of this stuff so we can see it a little bit better here now. This is a pretty nice candle right here on the 4-hour. We've still got room on Stochk RSI and RSI for price to continue higher if it would like to. We're kind of running into this initial kind of buy-side liquidity over here, right? And then we've got a little bit higher up here, of course, where we've got this support and resistance. Let's kind of zoom out a bit here. Well, let me zoom into the 1-hour first here. 1 hour, we've just about topped out on Stochk RSI. RSI is overbought. Let me see, 15 minute, well overbought here. You can see the nice rally. This is the kind of thing you want to see, whatever time frame you're on. When you've got a rally or you've got a decline, right? If you want to know if that's legitimate, what you're going to see is you're going to see candle spreads getting larger, generally speaking. Not every candle spread, but in general, you're going to see it's going to start out small and they're going to get larger and larger. And then you're going to see the volume expand as well. It's not just a spike of volume, it's this expansion of volume along with that expansion in candle spread. And when you see that, that's going to tell you, hey, listen, this is a legitimate move. This is in that direction that we're going on. People often get caught up because price moves, but you still have little tiny candles with it. Your volume stays real low. You're not having expansion in volume. Expansion in volume tells you there's an increase in participation. Okay. And so that's what you want to see, whatever direction it's going. If you think that is a a trending direction on that time frame, then you want to see your candle spread, you want to see your volume expand, because that's the first thing it tells you, there's more participation. Now, on top of that, you want to see your candle spreads expand, because what that tells you is not only is there more participation as price is continuing to rally, but also in this case, because it's going up, demand is dominating, right? You can have little candle spreads that go up here where demand's kind of in control. But if you're having a lot of volume and you're just having small candles going up, that's a warning sign that you're not really getting that overwhelming kind of participation that you want from, if you want it to go up, that you want from demand. So you're looking for expansion of candle spread and expansion of volume at the same time. And when you get that, that tells you it's a pretty legitimate trend right there on that time frame. All right. So right now we're kind of sitting in this area. What do we got going on here? I'll tell you what, right here, this looks like 1, 2, 3, 4, 5. So 1, 2, this looks like 3. We got largest volume, large candle spreads. So that could be a 3, get a pullback for a 4, and get a rally up for a 5. So it looks like we probably still got a little bit higher to go on this at least. Let's zoom back. Oops, let's zoom back out to the daily here. Actually, put that other thing on the other time frame, get it off that one. There we go. Now, this is what we like to see this, okay? We're starting to get some volume in here. We'll have to see how this ends the day, but we're breaking out above that daily pivot. Now, what we're going to need to see is on this chart, and this is the Coinbase chart here, okay? Bitcoin USD on Coinbase, not USDT and not some other exchange. But on this exchange, because of this move out, what I really want to see is an extension up here towards 63,886. Because what that would do is potentially give us 5 waves up here to give us wave 1. And then wave 2 is a 50% pullback to the pivot. I want to see that daily pivot hold this support. That is the most bullish thing. If we're going to get this rally up here and then a pullback and the daily pivot holds the support and it rallies back off and it heads up again, there is absolutely little to no reason you should be thinking of that we're going to get any lower, not just lower than 49, but any lower than over here at 52 and change. That should indicate that the low is in here, that these lows are in. So if you're really kind of bearish, okay, if you're really kind of bearish, what you want to watch right now is what happens now. Okay. Now, just because the daily pivot doesn't hold doesn't mean that it has to absolutely go down lower, but I would be watching for that potentially to happen. But if this daily pivot here, and on this chart that's right there around 57,852, if that holds its support on the daily, there's no reason I would be thinking about lower, coming back down. Absolutely none at all. Okay. So it becomes really interesting. What do we do now? Can we get this push up into that 63,886 area on this chart? So that way we have a 50. So, that would give us maybe a wave 1 and then a wave 2 on the pullback here and wave 3. So it would be at least that. It doesn't mean it has to stop there. It could go higher. But in order to get a 50% pullback, which is what I generally look for a wave 2, it would have to get that high because we're going to measure it from this swing low here. Okay. Now, if you remember that pullback is about a 78.6 retracement here. Let's see if I can get this to come up. So this right here was almost 78.6. So this is kind of a sweet spot just beyond that 70.5. That's a sweet spot on a pullback for, a wave 2 here. So the idea is potentially that we have a leading diagonal for a 1 here. And then we have a 3-wave pullback here, 70.5, 78.6%, 78.6%. And now we're heading up, right? As you can see, again, the area we're at, you can see that significant resistance, support here, support, resistance, support. So if we're breaking out through here, that should mean much more likely than not that this low is in. That this low is in, this low is in. And we should be overall continuing higher. Now you can see right here, because of where we're at, you can see we're at that low volume node. So we kind of want to get above that. And then we'll hit another low volume node here around 62 and some change. 62 and lows right there as you get in that resistance area up into this, fair value gap. It's been mitigated with this move, but still there. So at this point, we are really interested in how the daily works out here now. Does the daily pivot hold this support? Because if it does, again, there's no reason you should be thinking anything, coming back down below this swing low, especially not below this one. I tell you that because, this is the way this generally works. But when we're really emotional about a trade, if we're really bearish, for instance, we're going to be making excuses in our head why this needs to be rejected and go lower, right? It's okay if you're bearish. I get it. That's fine. But you have to be able to understand when it may be, when what's happening may be different than what you're thinking is happening. Okay. And so that's why I bring that up. It gives you just something to watch. Again, just because if it were to break down below, that doesn't mean it has to go below these swing lows here, but I would definitely be watching. But if we're popping up through this area, getting basically above this swing high right here on this chart is 61,194.09. If we're popping up above that, I'm not even thinking about lower lows at that point, because to me, there's three waves down here. So breaking up above that, kind of what we're seeing on here, right? It locks it in as corrective, which means you go up higher. So again, if we're getting through this area right here, that should lock that in as corrective, and overall we should be heading higher. So the one day Stochastic RSI, you can see here, is topped out, but RSI is just now getting bullish above neutral. Okay. But watch what happens on the 3-day. Look at how beautiful the 3-day looks here. This current candle opened when? It opened yesterday. So it closes tomorrow. 3-day candle here, right? So we got a bullish engulfing candle right here, right? On greater volume, slightly, but greater volume than this almost doji candle here at the low. So that's your first clue that you should probably be long. Here, we're getting another breakout. Look at the Stochastic RSI here. We dipped into oversold, broke right back out, crossed bullishly. We've got a lot of room to go here for price to continue to push higher. So the daily can stay overbought for a while on that stochastic RSI as the 3-day continues pushing it higher. So don't think that just because on the daily that we've got this kind of topped out here and overbought that we have to immediately turn back down, right? You've got areas like right here where it continued to push higher, right? So you went from basically 64,600 some change up here to 70,000. So, you went up basically another 10% from there. 10% from here, and the day's not closed yet, but 10% from about 60,000 to 66,000. So we could see it break out here. And I'll tell you what, if we're breaking out above this swing high, again, absolutely no reason that you should be thinking we're going any lower at that point. That confirms that most likely we are headed up higher. I say confirms. Confirms a bad word. Adds a significant bit of confidence to that idea. Okay? So, a lot of potential left in this to rally up higher. This was a good breakout we had here with the move up. So the question is, what's going on? Now, here's the thing. If we get rejected, we keep on pulling back here. Well, you know what? Again, we're going to follow my original thought and, pull on down here toward this 55,750, 55,800 area. But I would be looking for a reason to go long in this area, because the idea would be we've got like a 1, 2, 3, 4, and somehow this silliness here is a 5 going up there. So it gives us a 1 and a 2 here, and then we go with 3. On the daily, we'd have to see how the rest of if that's the top, then we could see this kind of fall off through the rest of the day. It's only 11:40 my time in the morning. So we've got another 7 hours till the daily closes. So we could see this fall off on the daily. We could see it get rejected and pull off. And at that point, people who are exceptionally bearish or scared or whatever would say, oh my God, look at this. We got this huge upper wick, kind of like this one, right? Up here, look, it got rejected. We're going. Could be, but watch for the reversal down here around that 55.7, 55.8 level. Look for that reversal there. Because if we can get that, if we can get that rally right off that, that's going to again suggest we've got a 1 and a 2, and we'll have a 3 heading up. All right. So we got that. Let me, there's always these people in here putting all this nonsense on. Thankfully, this platform crosses out their links they try to put on there. Is there any way to margin trade Bitcoin in the US? The issue with Kraken is you need 10 million in assets. Yeah, because, you know, again, US laws and whatnot, right? Curious what folks in the US do for margin trading the US VPN. Most of them probably do a VPN. I think Coinbase One has 5x, I think, on it, right? I think Coinbase One does that. Now, I think I just got an email from them the other day, well, the other week, saying that you can get 5, but that would be as much as you can get as 5 times on that, on your leverage. But yeah, because of, you know, US regulations, yeah, we're really kind of SOL for that kind of thing. I would never tell anybody to use a VPN and go do that. You know, do what you need to do, okay? But, you know, I would put myself into some serious issues, most likely with the SEC and everything, if I was to say, yeah, you should go out there and use VPNs. So I would never say that. You know, abide by the laws of your country, yada, yada, yada. You guys understand that, right? But I would, yeah, I believe that people in the US that are leveraging probably are using VPNs to do so. Because that's the only way I can figure out that they would get through the, oh, hey, you're from the US, so you can't use our site thing that they use, right? So, yeah. Brad, what's going on? He says, that's how I see it too, Chris. Close the daily above that level of 60,000 would look good. Get above the last lower high at 64-ish. I'm looking for a return to all-time highs. I like the way you think, Mr. Fisher. I like the way you think. Yeah. So, you know, that would be go. Now, I'm going to be clear with you guys here. There are specific ways that we look at market structure, okay? And so when we're looking at market structure, we are in bearish market structure here. Why? Because we have a swing high to a swing low, to a lower swing high, to a lower swing low, to a lower swing high, to a lower swing low, okay? So you can't get your next lower high until you get a lower low, right? Because anything can happen in between, right? So here we have to say this is the last lower high. This is the last lower low. Why is this not the last lower high? Because price has not broken down below that last lower low yet. So we could see this continue to break out higher, right? And if we break out, even if we don't break out above this one here, if we just break out to the R1 pivot here, we'll say, right, above this swing high, and then we go down, make a new lower low, well, this swing high here would be the next lower high, right? It wouldn't be this one. And this is something a lot of people get wrong. A lot of traders get wrong in the way that they look at structure, okay? You absolutely have to have a new, in this case, we've got a downtrend with lower highs and lower lows. You have to get down to another lower low to print out, you know, to confirm another lower high. Until you do that, anything can happen here, including just making another higher high locally and then breaking down, or continuing to break out above the last lower high. Okay, guys? So make sure you understand that. I see a lot of traders online that, you know, they've got their trading groups or whatever, and they don't understand this concept, right? And so they'll look here and they'll go, oh, look, well, this is a lower high because it is lower, right? And they'll say, oh, look, well, we've got a lower high. We just need to get above that. Well, no, we need to get, it's as far as this bearish market structure goes, we have to get above this one. This is the last lower high, as confirmed by the following lower low. So we have to get out above that to break this bearish market structure. Okay? And so that's what we have to look for in terms of market structure, right? So I guess that's probably enough to tell you guys about that. So just when you're looking at understand that this is bearish market structure here, and right now we are between the last lower high and the last lower low. This may be a new lower high, but we actually we don't have to close. We just have to break down below this 49,000 area here from back on August 5th. You got to get through that in order to say, okay, that is the last lower high. Until you do that, this is the last lower high. And if you break out above it, this bearish market structure is broken then. And now we're looking at bullish market structure off this swing low. So, low, high, again, if you're breaking out higher, low, then you'll get a higher high. All right. So that's just kind of to keep in mind, when you're looking at what is the trend, where are you at in terms of things. I mean, for all intents and purposes, this is sideways, really, because almost all the price action is happening right here in this kind of 58 to 68 area, $10,000 range. You have some deviations above it, some deviations below it. But most of that price action over the last 5 months plus, it's happened right in that $10,000 range. So yeah, as we continue to look at that again, looking at how do we do on the daily here, does it hold this support? If it does, and when we don't break down below it, things are looking really good in terms of further upside. But just because we break down below it doesn't necessarily mean we have to make a new lower low here. Again, watch for that movement to that hourly pivot and see if we can get a rally up off that. Now, as I've been telling you guys, if we do break down below that 49, I'm not worried about it, right? Because what that means is we'd be looking generally around the 43,000 area here, because a wave 4 initial target is 38.2. Secondary target is the 50% retracement of wave 3. So for me, even if we were to lose that 49,000, we're still within a fourth wave here. But if we were to lose it, I would look at it one of two ways. The first thing is potentially just a sweep of the low here. So we might go maybe a few $1,000s lower and then boom, right back up, big wick. The other thought is we get the move all the way down toward that 50% area and probably still leave a big wick. We probably get this same type of move coming down here. So, again, that's what we're doing. If we were to continue to break on down to that 50% level and continue pushing down lower, then I would look and go, okay, well, maybe there's some other really kind of weird count going on here. But right now, it aligns, guys. It aligns almost perfectly, right? So you have your 1 and your 2. That gets that wave 3 just around the 1618. That's where we generally tend to look. Oops. There. The pullback, again, of wave 3 here, that pullback is the 38.2, just prior to 38.2. So, I mean, wave 3 is where we would generally expect to look for it to go. Wave 4 is generally where we would look for it to go. So I'm really hard pressed. Like I said, unless we were really kind of blowing below that 50% level here, that anything's different than what we're seeing here, what I've got listed as the count here. Okay. So none of this has to do with being a perma bull. None of this has to be doing with anything other than this is Elliott wave, right? And if we're reading Elliott wave, this is what we do. Wave 3 extension is usually around the 1.618 extension of wave 1. I just showed you we were about there. Wave 4 on the pullback is generally going to be about 38.2% of wave 3. Again, we just about hit that right there. So the good thing about this is you don't have to be emotional, right? It's a system. It's a style of trading, right? So something I've been really kind of pushing here lately, guys, is as traders, you should be driven by systems that incorporate setups that are most likely going to be correct for you rather than not correct, and proper risk management. So what does that mean? You can learn tools like Elliott wave, okay? Or you can learn tools like ICT, or you can learn tools like Wyckoff, right? And it's important that you learn the tools. You learn those systems, those strategies, those ideas, right? But the goal is to learn them and understand them so that you can start picking out setups, right? Structures that are much more often correct than not. Okay. And then you devise your trading around those structures. You're just looking for the structures. If you were looking, if all you wanted to do, if you like flat corrections, right? Then all you're looking for is this kind of move, right? And you get 3 waves down, 3 waves up if you're looking for expanded flats, and then 5 waves down. And then you're looking to go long here for your next move up, right? So this is all you're looking for, right? By the way, this aligns with some of the models. The models that ICT has put out, he may not know that they are. I don't know if he does, but there are a lot of Elliott wave. They're expanded flats and stuff like that, or just regular flats and, corrections, stuff like that. People will say that there's nothing new in trading today, and they're pretty much correct, right? As anybody that's in TWC can tell you, I show them all the time. I show them that no matter whether you're using price action or whether you're using Elliott wave or whether you're using Wyckoff or whatever you're using, if you're doing them correctly, your targets generally come out to be the same areas. Because trade just, price just moves through areas of liquidity, creates balances, right? Along the way. That's all it does. And it's just different ways of understanding that structure and that movement, right? So that, that's kind of what we're looking for when we're out there. We're not trying to tell the market what it has to do. We're trying to understand what is the market telling us that it's going to do or that it's doing at that time. And then to hopefully be aware enough, that our emotions aren't ingrained enough into it that we can change our, the way that we're looking at the market when it shows us that it's maybe doing something different. And everybody has a different way of understanding that, right? But the goal is you want to be able to say, I'd rather be profitable than be correct. And what does that mean? That means that you're willing to say, oh, wait a minute, I thought we were doing this, but no, it looks to be that we're doing something different. Why? Because it's gone through my invalidation level, which, by the way, is a great thing about Elliott wave, because Elliott wave lets you know, listen, however you have it counted, right? If it's going through your invalidation level, which are clear, then you know that the way you're looking at it is incorrect. Stop losses. Let's talk about that real quick here, guys. Stop losses. Okay. People wrongly believe that stop losses are there to save you money. That's a secondary effect. Your stop loss is there to tell you that you're wrong. That's why your stop loss is there. And when you understand it, you may think, oh, it's semantics. It's just words you're using, Chris. No. What we're saying is, if you understand that your stop loss is there to tell you when you're wrong, then it forces you to be more clear on why you're putting your stop loss where it is. Is it actually a logical, real place that you should be putting that stop loss? Or is it just somewhere that, well, if I put it here, my risk reward ratio is a 3 here, rather than if I put it here, it's a 2. So I want the risk reward to look better, so I'm going to put it at this area so it can be a 3. Well, that's not the right way to do it, right? There are specific ways that you should put your stop loss in. And again, these are things we teach, especially with our group coaching there, in terms of using Elliott wave, understanding structure with Wyckoff, understanding structure with price action, which involves a lot of ICT concepts, but also a lot of the stuff that I've learned over the last 3 decades of trading. But the goal is to get you to understand how and why prices are moving the way they do, why markets move the way they do, and to help you understand, okay, well, if that's the case, then where are we potentially looking? And at what point am I invalidated? So when you understand that your stop loss is just showing you where your thought process is invalidated, that helps you set your trade up better, right? It helps you be more precise and better with your risk management. And then if it does get hit, yes, as a secondary effect, it does save you money, right? It saves you from writing it down lower or writing it, whatever way you're going in the wrong direction, right? But make no mistake, the number one reason for your stop loss is to let you know that you're wrong with whatever you thought was happening, right? Does that make sense? Bits of Wealth, what's up, buddy? Bits of Wealth, that's my favorite bear right there. I'm going to tell you guys. I love that guy. Mass Trades, what's up, man? He says, oh, hey, what's going on, man? He says, hit the like button. Been amazing for my trading, understanding markets for years, as I know many traders are. As we need to get more of them onto better information with TWC. I appreciate you, buddy. Thank you so much, man. What's going on, Peter? I see you checking in there. So, yeah. So, again, and I hope to show you what I'm showing you here, I hope, is that it's an understanding that trading is about structure, okay? Trading is not about, my, emotions say that it has to be that way or that way. I'm going to tell you, 30 years doing this, guys, the emotions never go away. We're human beings. It's what makes us human, right? We have emotions. If you don't have emotions, life is pretty tough. Believe it or not, it really is, right? Because you can't form relationships with people, right? Friends, lovers, whatever, partners, all that kind of thing. But just because it's there doesn't mean you can't learn to identify when it's happening. And that's the key. That's the goal, right? Is to understand when you're being emotional and then understanding how to deal with that. I'm telling you guys right now, it's not this TA stuff. This is not what makes a successful trader. It's all that emotional and mental stuff, being able to deal with it, understanding it, putting things in play, putting things in processes that help you deal with it. We often think we can do whatever we want. We in our head, oh yeah, we can figure this out. It's not a problem. We can do that. But when it comes time to actually do it, it becomes a lot more difficult because we don't have a system in place. The greatest thing about systems, guys, not just with trading, but in life and everything you're doing, is that it gives you rules. And if you're following rules, you don't have to be emotional. Or even if you are emotional, you're following the rules, right? It tells you this is what you have to do. And it makes it easier to deal with those emotions then. Okay? Let me see here. Yeah, Troy's bringing up the next thing I want to talk about real quick here. He says, just in the last few days, FedWatch went from showing 15% chance of a 50 basis point cut to now showing 45%. Are you still expecting only a 25 basis point cut this week? Yeah, I'm still looking at a 25 basis point rate cut. We'll see if I'm right, but nothing's happened that really gives them reason to do so. People say, okay, well, CPI was really kind of dropped a bit there, and so PPI has dropped or whatever, and so those are reasons why. I don't think that's enough off there. I think they're just fine at the moment doing a 25 point basis point rate cut. So, we'll see how it plays out. Again, the problem with a 50 basis point rate cut is that it signals to the market that the Fed is concerned, right? When you do a 50 point right off the cuff. If you can do a series of 25 basis point, then it's controlled, it's manageable. That's the signal that the market gets, that there's nothing going crazy, nothing going off the rails for the Fed. But when you start off with a 50 basis point cut, then it kind of says, well, maybe the Fed's really kind of concerned about something, right? So that's why we look at that. That's why we see that, we go, okay, well, let's see how that comes out. Now, again, it doesn't have to mean that, but that's what the market's going to take it to mean. I said this before. There could be an argument made for the Fed should have done a 25 basis point rate cut last time. And so because they didn't, they should do a 50 point this time. But again, it signals to the market, even with that in mind, it still signals to the market that the Fed's kind of freaking out a bit, more or less a way to say it. And so then you should be, watching. You should be a bit more careful. You should be watching more carefully to the markets and what's going on with them, if that makes sense. But 25% should be fine. Again, a 25% rate cut doesn't really do much of anything, but it's the start into a cutting cycle. So it kind of lets them know, listen, the Fed's going to cut the rates, but they're not concerned that everything's really, really bad where it's going here, that they have to, give a big cut. They're just kind of easing into it. So that's what we want to do. I see here, Troy, what's your question there, man? He says, wouldn't the market recognize that policy is currently too tight and the Fed is behind other central banks like the BOC and ECB by several cuts? So a 50 cut would bring the Fed closer to those other central banks. If they sat back and thought about it rationally, yeah. But even that, again, the U.S. is not the ECB. The U.S. is not, the BOC. The U.S. isn't the BOJ. The U.S. is, we aren't those other ones, right? The U.S. dollar is the world's reserve currency, right? So what the U.S. does in terms of its rate cutting and hiking have much stronger effects on everybody else, right? Because everything's global, and the USD is that reserve currency. So, sometimes people go, well, why doesn't the Fed do this or this really strong moves? Well, because what kind of effects is that going to have on the rest of the world, right? And when you're looking at it in terms of, if you look at it in terms of, say, the government and treasuries, right? You don't want to do something so significant. The Fed doesn't want to do something so significant that it forces sell-offs of those U.S. treasuries, right? Stuff like that. I mean, so these are just things that they have to think about, as they maintain policy. It's different than if you're the ECB, or the BOC or the BOJ or whatever, which are not, they're not reserve currencies. They don't, grease trade throughout the world, right? So there are those other things that you have to think about, if you're the central bank here, if you're the Fed, that go just beyond what's going on in the U.S. Because again, as interconnected as global finance is, and the fact that the USD is, used at 80 somewhat percent of the transactions across the world, 60% of the world's debt is denominated in USD. Why does that matter? Because U.S. debt has to be repaid in U.S. dollars, right? So everything's kind of interconnected here, and of course, if we're issuing treasuries, we need people to buy those treasuries. The Fed holds a lot of treasuries, but again, Bank of Japan holds a crap ton of them as well. China holds a lot of them. So the things that you do here can have effect on whether they'll continue to hold as much as they have, or they'll buy more or whatever, which in turn affects your trade relations, right? So, especially when it comes to things like, the U.S. and China and stuff like that, the U.S. is going to be like, oh, well, we're going to do this to you since you're not doing this. And then China go, oh, well, we'll just sell off your treasuries. And that would hurt, U.S. markets. And so, of course, the Fed has to go in there and say, well, we're going to do this then. It's just really, it's not as simple. It's not as simple as the way that most people that you're following online are going to tell you it is. When you're talking about rates, when you're talking about U.S. treasuries, when you're talking about the USD, all this stuff, because the world is all globally interconnected, the financial system especially, and the USD is the reserve currency. What the Fed does has a ripple effect, a very strong ripple effect, not just throughout the other economies, but what their response then is to it, and how that then echoes back into the U.S. economy. So hopefully that makes some sense there. So it's not as simple as, okay, well, they're doing it, so we got to keep up with them kind of thing, right? And then, of course, you also have the economy itself and how it's doing comparably to them as well. So a lot more, of course, into it than just simply, oh, well, they were already cutting, so we need to cut. But I digress. Let me see here. So yeah, so Bitcoin, I like this move up today here. We hit our initial target that I talked about on Twitter a few days back. We will see if that daily pivot tends to hold on the daily. Okay. Let me see here. Let me pull up a chart. Gold and silver moving well this morning too. I posted something about that on Twitter this morning. X, whatever. I tweeted about it on X. I posted it on Twitter. Mess with some people that way, right? Oh, I guess we'll sit here a minute, wait for the TradingView app to catch up here. Come on, TradingView. Anybody got the Jeopardy theme while we're waiting? Oh, man. What's going on here? There we go. All right. What do we got here? Well, we've got gold here. Look at gold doing its little thing. So we had this potential, like looking like it wanted to be the diagonal here. But of course, all it did was sweep that low right there into the pivot and continue up higher. So we could be looking at that extending a bit. Maybe something like this. As you can see, it's nearing my target up there at 26.2250. Let's see here. So yeah, we're right at what, 26.1350 at the moment here. So we're coming on it. But they're good, good move yesterday, kind of breaking out through this horizontal resistance we had here. Or even, you could even look at this as like a bull flag. Something like that there. And this is the kind of breakouts that when we say we want to see impulsive breakouts, this is what we're talking about. You see how we get this large candle spread compared to the candles in here? And you see how we have a spike of volume? When I say impulsive breakout, that's kind of what I'm talking about. It doesn't have to be exactly this, but the candle spread, the size of the candle body in relation to the candles around it is much bigger, and your volume is much greater than the volume around it. That's the kind of thing we're looking for. This right here, guys, becomes, this is your confirmation that you're coming up out of that, right? Now you can do a simple target here and you can go, okay, well, swing high to swing low area. And that gives you basically a, 1618 target. You would have hit it right here. You would have been good to go, right? Sats is in TWC with us. He says, gold has made my month. Yeah. It's been great. It continues up there, right? On the daily, again, as you can see here, we still have room on the stochastic RSI and RSI to continue higher. I love that we came in sideways between the R1 and the pivot, and we tested the pivot as support. Nice doji candles there with large lower wicks. Good volume on this move down into this with the large wick there. That should be, whether it's there or the next one, should be your indication that you want to go higher, that you want to go long. If you want to wait for the breakout, you can wait for the breakout, but I usually try to get them on the pullbacks versus the breakouts. So the setups there, it looks good. Let's see what the larger time frames look here. Room on the 3-day. Look at that 3-day candle. This one closes today. It started Wednesday. If I'm looking at this is 1, 2, 3 going up here. So let's see here. Look at that. And we're getting over the 1618 here. So I would expect that we'll probably find a top pretty close here. Either, a little bit higher toward my 262250 or even 262780 target here. And we'd look for a pullback, and then we'd look for a breakout higher. The pullback we're going to look for whenever we have a top is a 38.2 in the second wave. So if this were to be the top, we'd be looking for a pullback probably to 25.7650. Secondary target at 25.6440. That's the 50% pullback. And then we'd be looking for, move up toward 26.4060 or even 26.4860 on that. But, this could continue pushing up for the, more today. So we'd have a pullback, but that's how we do it. Now your weekly is looking pretty interesting. Your weekly remains overbought on stochastic RSI. It's overbought here on RSI. Weekly candle looks really good on the breakout. Weekly. So we have, again, coming in sideways here between the R1 and the pivot. We pulled back to the pivot and then rallied up impulsively halfway up into the R3. That aggressive movement off the pivot here suggests that we are likely to hit the R4 or maybe even the R5 or higher going on there. So, by the end of the year, I'd still be looking for us to get up here 27.5660 at least. And really 3,000 probably looks like a good target by the end of the year, just based on, models that we use when we're trading. This particular model, this pullback here, this movement sideways, pull back into the pivot, and then aggressive move up between the R2 and R3 like that. That usually, like I said, gets us a minimum of the R4 pivot, but most often will get us the R5 or higher on that, right? So it's been a good trade right here, right? It's been a great trade. It's great on that pullback there. Sat says gold is great to trade right now because the contracts don't switch until December. Let's see here. Andrew says called the minimum expected wave 3 soon, 27.47 range. Yeah. So what you got there? We've been in the contract since February this year looking for this breakout. Yeah, it's been a really good year coming up with this setup here. Having this nice, this is fourth wave here is what we're looking at. So this would be wave 3. This is a flat for wave 4. And then working on wave 5 up through here. So, I mean, just on the fact that this is a wave 4, we would generally be expecting to look for a minimum expected target up here around 24.47. And we've broken out through that. So, down here at 2,000, 2,100, you could have already been looking 24.47. Or if you got in down here, right, if you understood this is 3 waves down, 3 waves up, and 5 waves down here, you could have looked for a breakout here. So here you could have been in from 1,700 or even 1,775 or so, looking for a target of at least 24.47 on that. So, the way that we approach the markets is many times more important than what we think the local trade does. Okay. Brad, have a great day, bud. Thanks for checking in, man. So yeah, we continue to look up there toward the targets. It looks good on that. What's going on with silver here? So again, silver, I've got my 3 and 4 here. We've got 1, 2, 3, 4, 5, ABC, ABC. So WXY here. We pulled back how far? 50%. Everything's aligning. So this is a 1. This is a 2. We're in wave 3, which makes sense because it looks like a wave 3. Why does it look like a wave 3? Because we've got large candle spreads coming up after each other. We've got larger volume. That's what we want to see. Oops. So this is the daily here. Of course, we've got more room on stochastic RSI and RSI. Locally, we've got a 1, 2, and this is a 3 locally as well. So we can say, well, we've got this wave 3. Minimum expected target of $34.55. So minimum expected target there. And that kind of gets us pretty close to this. That wave 5 is up there because, again, as I showed you on the other one, measure out that wave 4. Look for that 1618 extension. So that's kind of why we have that there. What's going on locally here? Again, 1, 2, 4, 5 in here. We've probably, like gold, we've well extended beyond the 1618. Yeah, look at this. Our wave 3 here. So usually the 1618 is the initial target, and then the 200, and then 2618, 3618, 4618. So we could see this continue up here toward 3171 potentially before wave 3 is done on that right there. But ultimately, I'm looking higher targets here. So I'm looking at this wave 3 up there at 34,565 as this continues to play out locally here. So silver still looking good as well. 3-day. 3-day's got a lot of room on silver here. Look at that. Looks nice. Look at that 3-day candle on silver. Kind of gapped up a little bit. Rallied up well. Weekly. Oh, weekly's got a ton of room to go as well on this. Look at that. But if you're wondering why maybe silver may be outperforming gold or something like that, it's because silver all-time high is back there on April of 2011, and it hasn't broken out above that yet, whereas gold had that same, August of 2011 swing high there, and it broke out back in July of 2020 over here. So if you wonder, that's why, right? But you can see the difference here in the RSI and stochastic RSI of gold versus the RSI and stochastic RSI of silver here. So we could see silver continue to outperform gold coming up here. Would not be surprised to see that at all, right? Let me see. Nvidia has been gangbusters here, right? So I have a chart that I haven't looked at here in a bit, but let me check it out. So Nvidia is one of those ones I've been talking about on here that we were looking for a pullback. It made a bit deeper pullback than I was looking for initially, but nonetheless, look at the rally here off back here on Friday the 6th, so a week ago. So Nvidia has rallied up. What is that? Almost 20%, 19.5%. Done really, really well with it. And you can see right here, this is the 1-hour stochastic RSI resetting into oversold again. We're just getting a little local pullback, it looks like, into this bullish fair value gap right here for right now, which just so happened to coincide with this gap over here. So really no surprise there. When you see gaps, often you'll have gaps or fair value gaps printing over them as they do it. So kind of looking to see if we can get this rally to continue higher here. But I mean, if I'm looking here, I think we continue to head higher. We pulled back 70.5%. That's, to me, that's the magic level. That's where we want to look for most of the time. Minimum 50%, but I'm much more into the 70.5 than the 61.8. I know it's probably sacrilegious to Elliott Wave practitioners out there everywhere, but the 70.5 is that institutional pullback level. It's halfway level. It's halfway between the 61.8 and the 78.6. So a lot of institutional algorithms will use that 70.5 retracement. 4 hour. You know, again, here we are. You can see if you look sideways, look at what's going on in this same area here. You have this gap up, long, lower, you know, you have this hammer kind of printing here, this large lower wick. When we came back down, we just gapped down through it. We're coming up through here. We're fair valuing gap through it, right? Not quite 3 white knights here because you've got this large drop down into the previous candle. If we didn't have that, if we had a very small little wick like this here, this would be a 3 white knights looking thing, which is just a bullish candlestick pattern. But yeah, if we're looking here, this looks like a 1 and a 2. Is that a 3 there? It's the 4-hour chart. Yeah, see, right around the 1618 there. So again, this looks like 1, 2, 3, probably a 4 in progress, which means it would be expected to pull down a bit lower. We're only at 23.6. So I could see it potentially coming back down here toward 114.5. And if we can get that, that'll get us a 5th wave target up there. Right around 125 or so. Gets us right into this little, this little kind of gap area with the doji and everything. Right here into this low volume node. So it makes sense to get a rejection there. So we'll see if we can get this kind of pullback toward there. Of course, secondary target would be the 112.66 level, which is the 50% pullback. Let's see here. Zooming out a little bit bigger time frames here. What does that daily look like? As you can see, daily's got a lot of room on RSI and Stochk RSI still to go higher. Oh, look at 3-day. Look at the 3-day here, guys. Let me see what we got here as far as swing low is at 46.74, 47.31. Okay, so higher lows still off that. But look at that. Look at that big doji right there, and then we got this big follow through here. Absolutely crazy. We're just getting trying to curl back up here, going to threaten to break out bullishly and cross bullishly here of oversold. Weekly, we did have the bullish divergence here, or I'm sorry, hidden bullish divergence right here. And so then we kind of gapped up on the next candle. Otherwise, it would have been a bullish engulfing candle here as well. Volume pretty similar to the previous. 1.878 previous week. This week, 1.516 billion. So yeah, just looking for this to continue higher. I think we've got higher highs coming out of this, guys. If we just look based on this pullback here, it gives us that 183 3/4 kind of area, target area. But that'll be dependent on how this plays out here. I think it's a 1-2, but if we continue to get some consolidation here, could be a triangle. So you get an A, B, C, D, and E. But this right here looks like 5 up, so I'd be hard pressed for that maybe to be a triangle. We're going to keep watching it though. But overall, done extremely well. Everybody's like, oh, that's the end of it. Nvidia's that was the top for Nvidia's going down, and actually it looks pretty much like it's going to continue higher from where we're looking there. So I like that. I like that as far as Nvidia goes. Let me see here. What's going on with Ethereum? Since everybody's really hating that, right? Give it a minute to load up here. Or not. It's dead air when you don't talk, Chris. I know. Oh my gosh, TradingView, let's go. Driving me nuts. I don't know about y'all, but if you've got TradingView, do you use web browser or do you use the TradingView app? I use the TradingView app here. All right. So it looks like we've got 1, 2, 3, 4, 5. So it looks like we've potentially got a leading diagonal here. Or we could... let me see. Maybe it's possible we finished wave 1 up there. It doesn't look like it. Looks like this gets too short here as a 3. But I've got this as a 1 and a really deep 2 here. It came down to the the line I've had here for since we started doing all this here. So 23. Okay, kind of this support resistance area. So that's where we tagged here. So let's zoom in there. That weekly is resetting really well. 3-day, it's really set up well there as well. Daily, looks like this could be a 1 and a 2 here. %50 pullback. So if this is just going to be maybe an ABC, if let's say this is not a 1, 2, if this is going to be an ABC, a correction here, whoops, then you should be looking 25.47 to 26.15 area here, the 100 to 123.6, which puts you right up to the pivot here on the daily. If this is the low and this is a 1, 2, well, wave 3, minimum expected target of 27.27, secondary target of 28.46. So things get interesting if we break out above this swing high up here, kind of get through this low volume node. That's when things get interesting. This is actually very ugly. I don't... If I'm drawing a line, and this, by the way, is drawing a larger time frame, but even here, if I'm drawing resistance, I don't want to see all this back and forth over it. That tells me that that's not the significant resistance I'm looking for. If this is clean, if this is significant resistance, like the type that says, hey, listen, we're going the other direction, then you should expect to see an impulsive breakout above it and sometimes a retest of it in continuation, but you shouldn't see a pullback through it. If you're getting pullbacks through your line, get rid of the line. Just like that. Does that make sense? Get rid of the line if you're getting pullbacks back and forth through it, because it is not the line. It's not the significance that you're looking for. Okay? We are finding some support around the pivot on the hourly this week. Yeah, we'll have to see what goes on here. Again, if this is going to be an A, B, C, that should be our target area. If it's a 1, 2, 3, initial target, secondary target up here. Would you be able to look at the Bitcoin miners? I could maybe look at one. I do put out a very inexpensive monthly, or it's a weekly newsletter called the Bitcoin Miner Stocks Report. You can go to bitcoinminerstocksreport.com. It's $20 a month, guys. It'll get you 17, 18, 19 different miners, something like that, updated every week with my thoughts on them, as well as news and information, some commentary, what's going on in the space, stuff like that. Peter, are you talking? You said so worth it. It's 10 of 10. Are you talking about the Bitcoin Miner Stocks Report? Yeah, that goes out every Monday evening, guys. Or yeah, right there toward the end of the day on Monday, my time is when it goes out. But I do all the those public miners do their charts on that. Let me see. Let me go ahead and pull up. Let's look at cores maybe. going on with cores here? Oh man, this is going to kill me today. I don't know why it's so slow. Peter, you say you use the browser for TradingView? I used to, and I tried the app, the TradingView app, when it first came out. It was really buggy, and it would just eat up memory so bad. And I've got, pretty strong computers that I use because I'm that guy that has like 200 tabs open at any one time, both in my browser and here on TradingView. But then they fixed it. It seemed to be working a lot better, so I use it all the time now. Bobby, what's going on, buddy? Good to see you checking in. Seth says browser seems faster. I don't have 500 windows open though. Yeah, I'm really bad about it. Cores has been fantastic. Of course, we had this really nice rally up through here. I believe, again, and on that, we had this pullback to the 38.2. So I do believe 1, 2, 3, and 4 are done. Yeah. And so here looks like maybe a 1, 2, 3, 4, 5. So we might got a 1 and a 2, like a leading diagonal. And a 2 is a short pullback. A lot of times on your leading diagonals, guys, your wave 2 pullback is going to be shorter than what you would expect. Often it'll be just like a 38.2 retracement. What do we got here? Yep, about the same thing there. And the reason for that is because you have all the overlapping price action creating a support area. So if I'm looking at this, I think this is probably a 1 and a 2 here. Whoops. And so again, we look at our initial wave 5 target there. It's right up there around $17.71. But if this plays out as a 1, 2, and we just get our normal extensions for 3, 4, and 5 retracements, that would actually have this extending up here to around 24.66. If wave 3 or something overextends along the way, it could go higher. But based off this being 1 and 2, I'd probably be looking closer to 24.66 to get that. But how beautiful of a chart is this, guys? Cores here. How beautiful of a chart is this? I mean, you have your great looking accumulation range here. You got your jump across the creek. You're back up the edge of the creek. Boom, and it takes off. You have another range here. Get ready to head up off out of that. Break out there. Volume profile's looking good. Look at the volume right here, guys. Look at this. You have this pullback, right? Small candles, small volume. So right away, that should be telling you it's probably going to be corrective, okay? But then look what happens here. Look what happens on this pullback. You have this little doji candle, right? And the people, they'll look at this a lot of times. They go, oh, well, that's a really bearish candle. Looks similar to this here. You got a large upper wick. And okay, but look at what happens. Look at the volume with that. Why is that important? Because look at the volume the previous day. Way down here. This one opened at 9:59 and it closed at 9:47. So there was a 8, 9, and 7. Yeah, 16-cent candle spread. The body there, right? This one opened at 8:55, closed at 8:46. So this one was only 9 cents. So smaller candle spread here, but my God, look at the amount of volume coming in. The volume here was only 4.319 million. The volume here was 51.25 million. If you see that coming in, if you see that candle spread, get into a smaller candle spread like that, and you see this huge, what is that? Basically 4 million to 51 million. So much more effort coming on there, and it had less result than it had on the lower volume over here. You should have been looking to go long off that. Absolutely insane how that worked out. Most of the time, that'll send you up in the other direction. Again, there's nothing that's 100% of the market, okay? But my God, if I see stuff like this happening, I'm taking the long trade there every day of the week. And sometimes I'm going to get stopped out, but most of the time, I'm going to be correct. But yeah, Cores, great looking chart overall. Just so you guys know there, that's Core Scientific. But man, oh man, just absolutely this is the stuff the dream charts are made out of. Like you should have been, if you weren't long here or on the pullback here or here, at least you should have been going long here and giving yourself a bit of a little bit of room there for the pullback maybe, right? And then just head on up there. That's a 9-hour trade. Just get up that wave 3 area. Jeremy, what's going on, man? It says, I use the TV app, but I use a top spec Mac Studio perfectly fine, even with the huge widescreen monitor, have 30 plus charts open constantly. Yeah. I gotta, man, I've usually got about, God, I don't even want to say it. I've probably got 4 or 5 different browser windows open, just the regular browser with about 50 tabs on each one. And then I have usually like 3 or 4 of the TradingView app things open, browser open, and I've usually got somewhere between 20 to 30 charts on each one. It's just absolutely crazy. Troy says the FedWatch app is now showing almost a 50-50 for both cuts. I'm surprised how much it moves. It seems almost memeish. It is kind of memeish, right? But what's happened today or yesterday that would have people thinking, oh my God, they've got to, do some stronger one. You got to think people in general. Remember what happened when we had August 5th, right? We had that overnight drop into August 5th into that morning. And if you looked on social media, X is where I'm usually at. You saw everybody calling for, oh my God, they need to do emergency intervention and whatever, right? Oh, they didn't. There was no reason to do an emergency intervention, emergency rate cut, right? But that's how people get, right? They get very emotional and they don't really understand how things work. I mean, there was nothing that happened there that said they needed to have done a rate cut, emergency rate cut or whatever. And so, we sit here now and you have to go, well, why the hell are they moving up all of a sudden here at the end of the week? Still got a few more days next week. Got the weekend and a few more days next week before anything happens. So you got to ask yourself, why are they all of a sudden pushing it up today? Probably something else going on there. But anyway, oh gosh, I am over, guys. It's over 12:30. I got to get going. Man, I appreciate you guys showing up as always. Let me jump back here, Bitcoin, quick before we go. Man, look at these guys just keep on pumping up. I love this. Such a beautiful day to be in the markets, guys, to be long in the markets. Let me zoom in here real quick. See where we're going. Yeah, we got a pullback here. Again, if I'm looking at this would seem to be a 1 and a 2. So maybe be a 1, 2, 3, 4, 5. So we might just a little bit higher up there, maybe get the pullback. But again, the big thing you're watching for, guys, I don't want to do the second by second thing here because you're not around me 24/7 to get those updates. But the important thing is, does the daily pivot hold this support? And if we see this continued rally here, we're looking up toward that again on this chart, up toward 63,860 or 886, up toward this liquidity up here. Because again, that would give us a 50% pullback to that daily pivot. So we'll see if we can get that rally and break out higher. But, if we do break down lower instead, we're going to want to look toward the hourly pivot here. Right around 55,730, 55,760 or 735. There we go. On this chart, and look for a reversal around there to head up higher. Just a simple way to put it, okay? Ash, have a great day. Soren, Data, Troy, Jeremy, Peter, Sats, Bobby, Jonathan, all you guys that showed up. I really appreciate you guys being here. As always, remember the only thing you control is how much you lose. So please keep working on that risk management, okay? I hope you guys have a great weekend. Y'all trade safe. Don't forget to check out TWCTradersClub.com. That'll be up sometime today. And you'll be able to jump in, get your first 3 months for $50. And then if you want to stick around after that, if you like what you're seeing with, you're going to get access to my trades, the trades I'm actually taking, the trades Fibbo's actually taking, the trades that Andrew's actually taking. And if I can get one or two other people in there over the next few months, you'll be getting their trades as well. Okay. Bobby says he recently joined our liquidity pulse trading system and have learned what'd you say? Oh, I've learned some new skills. Definitely be interested in offers. Yeah, man, I love to see that, man. I love to see that. You know, again, we've always been about education. This new offering we're doing here is more really about the charts and seeing how they're executed to trades. We're not just putting out charts and going, oh, well, looks like a good setup. You're getting the same trades that we're actually trading, guys. So, you know, if that means anything to you in terms of, you know, what trade you want to follow from somebody, then there you go. Okay. All right, guys. As everybody, you know, no better place to learn, Seth says. I love it. As always, you remember the only thing you control is how much you lose. So please keep working on that risk management, guys and gals. Have an amazing weekend. Trade safe. Take some time away from the charts, guys. You need to do that to release that stress that builds up in the back of your head when you're looking at all that price movement all the time, okay? Do that. I promise you the charts are going to be so much clearer. Y'all take care. See you next week.